The Asian indices have started off on a mixed to a slightly positive note.
25,442, that is the daily upper Bollinger Band.
It seems the street is a little bit excited about this liquor policy that's going to be implemented in Andhra Pradesh.
25,300 plus back again on the Nifty, like yesterday.
The worry can be more on relative valuations across sectors.
We will see an further improvement in retail sales.
Third quarter of 26, we are expecting production to start.
We are looking at a very strong revenue growth.
Markets are trading absolutely sideways.
Samvardhana Motherson is looking to raise up to $1 billion via QIP.
It's an opinion column. Can perhaps shake the foundations of monetary policy making.
Fitment Committee recommends for a rate parity on car seats and two-wheeler seats.
Will we see a 13th or 14th consecutive day of successive gains? That's something we need to watch out for.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
All right, well, that's essentially the day so far, and it is as quiet as they come. I mean, just it's like a traffic light blinking red and green. Nothing at all really going on as far as index is concerned. Lots of stock-specific action, but again, a little bit of, sort of holding pattern like yesterday. I think pretty similar to the day that we had yesterday once again. This is Closing Bell, last hour coming up. We're coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant, with me my colleagues Nigel and Surabhi. Guys, good afternoon.
Hi, good afternoon, folks. I guess the difference from yesterday is that the mid-cap market is partying away. So no concern whatsoever. I mean, there's so much of individual stock level action to talk about, and we'll get to it in just a bit.
Well, that's right. You know, portfolios will be feeling much better today in comparison to yesterday. So I hope we go for that 14 straight session of winning streak. But I think portfolios today will be doing much better than yesterday, just going by the number of stocks that are advancing in comparison to declining. And the mid and the small cap index, as it is doing better. And
especially if those portfolios have defense names.
Yeah.
They would be sort of feeling some relief because stocks have fallen from the recent highs. I mean, the shipbuilders which have been flying high, or, the HALs of the world, etc. So there's a big rally on in many of these names, and we'll sort of touch base upon this with Upasana in a bit. I mean, actually, that's the one pocket which actually stands out. Otherwise, the Nifty, 10 points here, 10 points there. It has been that way for, except maybe around 115 or so, there was a bit of a attempt at a rally, but fizzled out fast. So didn't really go anywhere. We were above 25,300 or around there at the day's highest point, then sold off. So it's not very constructive, at least not today. So will we finally, even with a small negative close, end the 13-day winning streak? Will it not be 14th? I think that is the other thing to take note of. The broader market, you look at the mid-cap index and small-cap indices, about 0.4, 0.5% kind of gains. Sectorally speaking, there is a fair bit which is happening as well. So you've got action metals as a space which is down. Actually, I think only that one area, the sector, is down. About nothing very large either, about 0.5% or so. But you've got gains in many of the PSU names, a lot of the defense, of course, overlapping there, and a bunch of other areas as well, which we will talk about. So it's individual stock-specific stories playing out at a broader level, not very much. Surabhi.
Absolutely. And in terms of trends, there is a bit of a defensive nature to the large cap trade that we're seeing today, because a whole host of FMCG and consumer stocks are doing well. A lot of the large cap pharma names are having a good session. I mean, just a case in point would be, let's say, a Divi's, a Sun Pharma. These are stocks up and about. Cipla is tracking a small gain. And then all the consumer names, Nestle is the second best performing stock on the Nifty, 1.5% up. The first best performing is Hero Moto, in case you're wondering. That strong two-wheeler ride that's continuing, but on Hero, not so much on Bajaj today. But really, the story is all about the broader market. And I mean, whether it's today's listing, for instance, look at Premier Energies. It's not up 100% anymore, but still up 85%. So retaining a lot of that gain. And look at the broker stocks or the stock market related stocks, whether it's a JM Financial or an IIFL Securities, even something like a Geojit Financial. these stocks are, just really tearing through the roof. So plenty of moving parts to the mid-cap story today.
Well, that's right. Just a quick word on Premier Energies. Actually, the stock went down to 800 rupees. It listed more than 900 rupees, so it had an intraday big drop. And that dip actually got bought into. So I think, the intraday chart actually will tell you a better picture on that name. Sharp downtick is what we saw. That dip got gobbled into, and select other stocks that are doing well. Shimaru, I don't know when we spoke about it last, it's up close to 13% as we speak. So big up move is what we're seeing out there. Matrimony is holding with good gains. You have Johnson Hitachi, that's another one that's up and about in today's trading session. You have Goldium as well. We don't normally talk about that stock. It's been a bit of an underperformer, but in the last, I think, 1 month, Goldium has gone up substantially from 250 to 350. Very, very brisk move is what we are seeing. And today it's locked in upper circuit as we speak. So that one as well should come up for you on the screen. Well, how do you position yourself for the final hour of trade? We got Sachidanand Utekar who joins us. Hi, Sachi. Good afternoon and good to see you win. What's your take? Flat as can be on the Nifty. So where are we headed from here? Maybe we brace for a bit of consolidation, and also individual stocks. What are you looking at?
Good afternoon, Nigel. Clearly, I think it's a day of consolidation, but I think the Nifty has been respecting its 5-day exponential moving average support very well. Even today, we saw it declining towards the same, and already we are seeing a rebound. So I think this particular consolidation mode may continue when it comes to Nifty, until unless we don't see the Nifty closing below that 25,200 mark. I think the trajectory on the higher side remains open. We are optimistic on the market, and we are expecting that this particular rally could continue towards 25,450 eventually. But when we look at Nifty Bank, I think there is an opportunity here. In fact, for the last few trading sessions, the 5-day exponential moving average support has worked out well. Even today, we saw it slipping below the same, and there has been a good, strong recovery led by ICICI Bank. So probably we may see good momentum building in when it comes to Nifty Bank. The open high level is somewhere close to around 51,480, and we are of the opinion that going forward in the last half an hour of the trade, we may see this particular level getting breached, and that's why we are recommending building long positions in Nifty Bank. The support at around 51,300 has been very stable, so keeping a stop loss somewhere close to around 51,260. Long positions can be deployed in Nifty Bank. Eventually, we may see a swing towards 51,580, which may extend towards 51,800 as well.
Okay, all right. Got that. Thank you very much for the overall sense. Just in terms of individual stocks, Sachidanand, if you could run us through your strategies and throw in a word on Bajaj Finance in specific. There's a lot of excitement around the subsidiary IPO, Bajaj Housing. So we saw the run-up and the build-up in the stock. Today is a cool-off. So some levels here, perhaps, that one can work with.
Good afternoon, Surbi. Clearly, I think the consolidation breakout is very well evident on the weekly scale, and the way it has performed in last week, we may see some follow-through action after brief consolidation. So we are of the opinion that this particular stock may scale eventually towards 7,800, 7,840 kind of a zone. The immediate support base, which has acted well, is somewhere close to around 7,000 levels, wherein its 200-day exponential moving average is also placed. So any declines towards that particular support would again give us one more opportunity to create some fresh long positions. When it comes to momentum, I think we've already seen some signs of distribution here, but this looks like a classic, regular corrective move, which may end eventually. So on a decline, we are still, advising building long positions. We see this particular stock scaling higher towards 7,840. When we look at stocks, I think the participation has been more from private banking names, and we are comfortable building long positions in ICICI Bank. We are expecting that the stock may eventually scale towards this life high level, which is placed somewhere close to around 1256. From a trading momentum perspective, the immediate hurdle for the stock is placed somewhere close to around 1240. we may see a momentum bout once this particular level is breached. On the lower side, the support at around 1225 has been very strong. This is where its 5-day exponential moving average is also placed. So keeping a stop loss somewhere close to around 1222, we are recommending building long positions in ICICI Bank. The other stock which has been on our radar is Larsen & Toubro. Now, if you look at the weekly structure, there's a classic diamond formation which has given a breakout last week. So we are anticipating that this particular stock may lead the next leg of the Nifty, and we may see it scaling towards 3940 eventually. So here we are recommending building long positions with a stop loss somewhere close to around 3680, which can be maintained on a closing basis.
Okay, all right, got that. Sacharan, thank you very much for the calls. With that, let's quickly move on and take a look at some of the key triggers, the movers and shakers, and the stocks that are in focus today. And one such segment is definitely the defense space all over again. Now, this kind of a buzz seems to be playing out just ahead of the Defense Acquisition Council meeting today. We have Upasana joining in with details. In any case, I mean, there's been positive news flow around HAL with the big order contract for engines for the Su-30. So that was a 26,000 crore rupee contract, got HAL really excited, and then a lot of others have kind of tagged along. Upasana, fill us in on the details. What is the latest?
Thanks so much for that. Well, defense stocks continue to rally today as Defense Acquisition Council's meeting is scheduled today for approval of projects worth more than 1.2 lakh crores. DAC is expected to approve issuing a tender worth 70,000 crores for building 7 warships. And the main contenders for the same are Mazgaon Dockyard and Garden Reach Shipbuilders. Indian Army also plans over 50,000 crores projects to buy 1,700 combat vehicles. Now, HAL also continues to remain in focus as Cabinet Committee on Security has approved procurement of 240 aero engines from HAL. This contract is valued at over 26,000 crores and deliveries for the same will commence 1 year from now and is expected to be completed in the next 8 years. HAL also expects order inflow of 47,000 crores for FY25.
Okay, all right, got it. Thank you very much for that, Upasana. So lots of buzz around defense stocks. So let's start with this, with Deepak Shenoy, who's joining us on the show this afternoon. Deepak, great to have you on. So it's getting interesting now, right? If I had asked you the same question, say 4 weeks back, perhaps it would have had a very straightforward answer because the stocks were just going up and up. But now you're getting them at least 20 to 25% off the peak. And you've heard the news flow, the order wins are still coming through. So what now? Does defense still make the cut?
No, I think, Surabhi, there's a long way ahead. We've invested in a bunch of these stocks, so very biased. But typically, the phase one of, if you may, the defense change has been that the change of policy to acquire from domestic manufacturers, both public and private. I think that phase has started, and so orders are starting to flow through. But defense is our largest expense after interest payment. So there is a fairly large amount of orders that will go in just for a number of things, whether it's capex or whether it is just operational as well. There will be a large amount of orders that will come in from two sources. One is new orders. One is also changing the the regular orders which would have gone abroad to move them to domestic manufacturers. Now we are seeing that in ships, we're seeing that in aircraft, but we'll see that in a lot of other places as well. Now we're talking combat vehicles also. 50,000 crores is a very large number, but even for a large corporate, even like say Bharat Forge or L&T, which might be bidding for parts of those contracts or parts of the other areas here, you might end up with a fairly large jump in revenues over the course of the next few years. Simply because of this. I think the story is good. Stocks may have run up a little bit, but the landscape is like 5x or 10x what it used to be 2 years ago. It will probably grow even more as phase 2 comes along, where in order to manufacture all of these things, there will be the ancillary equipment, which is currently also some of it is being imported. That will also start to get manufactured in India, because eventually India will want the entire supply chain in India itself. So I think this phase will continue for the next decade. And in general, if you see defense spending in any other country, it tends to propel a lot in the economy as well, in research as well, and in manufacturing in general, whether it's Israel or the US. You see a lot of ancillary benefits down the line. So I expect this to be a longer run theme.
All right. Hi, Deepak. Good afternoon. Good to see you. And Deepak, I wanted to ask you about Vedanta. It seems the promoter finally is making the right moves, but the market is not supporting the Chinese market. Everyone's waiting for him to make that one mistake, which he normally does, Mr. Agarwal. But at least off late, he's been in top form. What's your view at around 466? Valuation-wise, it has support. The promoter is in far better shape, which you like it. And he's going to be segregating the business, so it has enough tailwinds. Your view?
So we haven't bought the Vedanta. In fact, most in the commodity metal space is not been of our interest recently. So I don't know, in fact, what has happened in China. So I'm sorry, I'm going to have to, I don't have an opinion on that because I don't know what it is. But I think in general, this is a commodity play. So you're buying it closer to the top of the. I think it's not valued. You should buy these stocks very cheap, relatively, but it's not that right now. And it's probably not the best time to buy it in the cycle. Of course, the promoter concerns, like you said, have come down a little bit. And there are other things that they're talking about with their other companies as well, which I think will strengthen the parent. But because it's a commodity, I don't really feel very comfortable playing it meaningfully when you have so many long-term, secular growth stories or strategic growth stories that are available.
Got that. Deepak, just coming back to you, good afternoon. I just want to highlight two other names which are moving right now. One is Bajaj Housing and the other is GMR Power. My colleague Sud is here with details. Sud, over to you.
There are two brokerage initiations. First one is Bajaj Housing Finance. Kotak Institutional Equities has initiated coverage with a buy call and target is rupees 550 per share. It says it is a large, affordable housing finance company with a long track record, and its multi-pronged expansion and appraisal strategy will drive 21% AUM CAGR over FY24-27 with low credit costs and stable margins and improving leverage will accelerate ROEs back to high teens. Next is B&K Securities on GMR Power. It has initiated coverage with a buy call and target is 184 per share, implying upside of almost 40% from current levels. It says company has installed power capacity that exceeds 3 gigawatts. Also, it has 2 gas-based power plants, but it is currently stranded due to gas supply issues. And in transportation and EPC, it has 3 operational highway projects totaling 730 lane kilometers. Talking about triggers, first, company has energy assets which is consolidated by acquiring stakes in GMR Energy, thermal assets including Varora and Kamal Ganga, and it has successfully restructured balance sheet which has reduced debt burden and enhanced liquidity. And also company has presence in smart metering with major contract in Uttar Pradesh that is valued almost 7,600 crore. And on the back of initiation, both Bajaj Housing Finance and GMR Power are higher in trade today.
So thank you very much for that. Deepak, I'll ask you to comment on some of these names and we can talk more. But I just wanted your thoughts on sort of what we discussed the last time you were on, which is SMEs, right? And I think some more water has flowed under the bridge since then. We were talking about the Yamaha showroom and the oversubscription, and you made pretty emphatic points there, and a lot of debate and sort of fire and fury around this. Yesterday we've heard from SEBI themselves. You must have heard, right? Mr. Ashwini Bhatia, whole-time member, talking about it. Then later he said that there is a consultation paper they're going to come out with on the IPO approval process to maybe make it more stringent. But that is in the works as well. Just wanted your thoughts, Deepak.
Yes, I think, Prashant, we have to have regulation that supports more disclosures and more information being given over to shareholders and potential investors, right? So you want that anyways. Currently, the SME market reveals their balance sheets only once in 6 months, or their profit and loss statement only once in 6 months. They should also be doing it quarterly. Absolutely fair to ask that. There should be more information, as much information as required in the IPO document as well. But I think the calls for this to be either banned or, SEBI is not saying that. SEBI is saying, no, we're not going to tell people not to have an SME exchange at all or not to raise money. But the craziness really occurs from the whole system that says your money doesn't leave your bank account, you can bid for anything. Then you will bid for whatever it is. And if something's overbid at 2x, you might as well bid some money so that even if you get a small allocation. The last IPO we talked about was a 12 crore IPO, 19 crore free money, 12 crores of new investments, and people have bid 4,500 crores for it. But this is not really bids. This is not money that you're actually paying. It's just blocked in your bank account. You're dead sure you're probably not going to get any allocation. If you get something, it's almost lucky. So almost everybody's throwing their hat into the ring. It's a procedural problem rather than a company problem. The company could have been anything. It could have been the best company in the world. But if it was raising only 12 crores, you would easily see a 4,000 crore, 5,000 crore subscription for it. And because it is a company with a two showrooms, I think people are, kind of making fun of it and all that. But this is, in fact, what the SME system is designed for. I think the froth, if you may, is in people's expectations that, if something goes wrong, if I start losing money, the government will come and protect me or SEBI will come and protect me. No. I think we should be very clear. This is your profit and therefore your loss. So you're going to go crazy in this market means you'll make some money perhaps, but you will also lose a lot of money at other times. And you shouldn't go running around to the government saying, support us, don't allow SMEs to list and all that. I think that is the difference in opinion that is happening. And I think even SEBI is saying, listen, we'll help make the market more secure in terms of disclosures. But you have to read those disclosures. If you're going to bet on some gray market premium, then what can even SEBI do? It's really a point where if there is a market, people will bet, people will go overboard, both on one side and the other side. Tomorrow there'll be SME companies.
That is markets for you, right? Deepak, but my point was, what should be done? Because they will do something, right? Because there is all kinds of things that companies should be free cash flow positive. There was something you must have read. You want to do something which doesn't throttle the space as well.
Yes.
Because it's emerged as such a fantastic source of funding, and there will always be sort of bad apples. But you don't want to throttle it too much either, right? So, I mean, have you thought about that? What can be done? Could the approval process, since that is what they're saying they'll come up with a consultation paper for, would that be made a bit more? I mean, would exchanges do it now? Should SEBI do it? I mean, just your thoughts.
Yeah, so I think the exchanges doing it is still a good idea. I mean, it's relatively, exchanges are good regulators in general. They can be fortifying this process a little more. I don't agree with this free cash flow statement because a lot of companies in general don't generate free cash flow at this tiny size. They're growing. They need to reinvest their capital back into growth. So if you're in that, you're not going to get free cash flow. You may get cash flow, but you don't get free cash flow. You're going to have to reinvest substantially in CapEx and substantially in other parts of the ecosystem. So I don't agree with an accounting definition because A, people will game it, and B, I don't think it's right for an SME market to demand that. Secondly, I don't think we have, I think the guardrails here should be about investors understanding the company before. So maybe some more information that can be disclosed, but also that you should perhaps even stretch IPO timelines in these cases or increase lot sizes on the IPO itself to be, say, 5 lakhs or 10 lakhs. But I would say that would, these are only temporary fixes because people will, if they found 1 lakh, which is what it is currently, they'll easily find a 5 lakh and 10 lakh and still the oversubscription numbers will be high. The point over here is to enforce bad disclosures, wrong disclosures, go after promoters, and fine them for all the things if they've revealed something wrong. I don't think we've seen a lot of instances of that. We know SME companies where a director has sent an email saying, sorry, I'm 24 years old. I'm the only person here. Everybody else has vanished. And no real action has actually happened against that company or those promoters. I don't know, if this was about 3 years or 4 years back. But I think that enforcement should be the defining criteria for banning bad behavior rather than trying to say that, you should be free cash flow positive. So I don't know what will come out, but let's see. The consultation paper will obviously be well thought of, so we'll have to give the comments based on that.
Absolutely, Deepak. I take your point because there are two different, problems at play, if that's what you want to call them. One is the FOMO in the market, that you want to try all things exotic, you want to, a shortcut to riches, and then you want to bid up a company which has maybe, 12 crores of profit, and you want to give it, subscriptions worth 4,000. And that's on the trader investors. And, they have to, as you said, the profit is theirs and so is the loss. But the other part is the important bit, what you're referring to now, that if there are, characters and candidates which are now trying to game the system, and if there's an element of market abuse in the making, then one would really hope and expect that the regulators step in, because SEBI has sort of done a very light touch approach to SME so far. And given the interest and the amounts at play, perhaps the time has come to look at it a little more holistically. By the way, I want to remind our viewers as well, so since we're talking FOMO of IPOs, whether it's SME or main board, tomorrow on Let's Talk Money, we take the conversation forward actually with Deepak Shenoy and also some representatives from HDFC Securities. Is the pre-IPO market or the unlisted share market, is that really a guaranteed road to riches? Have you asked the right questions that you need to ask before you start dabbling in unlisted equities? Well, we put that question to Deepak and Pranab Unyal on Let's Talk Money. The show will air at 4:30 tomorrow. You can, of course, send in your questions. So feel free to reach out to me or to Deepak on social media, and we will take all of your questions on. So Deepak, having said that, very quickly, let's wrap it up with a main board issue, and one which is having the highest pedigree. So I'm veering to the other side now, and I'm talking about Bajaj Housing. Our colleague Abhishek was telling us how, they're asking for top dollar valuation, perhaps for good reason. Your thoughts now that the pricing is out?
Yeah, I think valuations Bajaj is, the name Bajaj itself is like 8 times minimum kind of thing, price to book, that too, not price to the earnings. But you typically, you have a lacuna in the space, right? HDFC is gone. So the biggest NBFC now will kind of be Bajaj by itself. And it has the ability to go after a few things that banks can't. So, for instance, you can't lend against land if you're on a bank, right? So you get Bajaj gets to kind of go and occupy that space if it really wants to. There are certain limits that are applicable to banks, but not to NBFCs, and Bajaj can go down that route. They have been traditionally quite decent in terms of their book, and you can see from their bond prices that people value their book in terms of saying that, they are not going to be careless in terms of the lending process. So that way, I think, good stock, good pedigree. I would say valuations are nowadays, you can't talk about valuations because it's not very fashionable to say something is overvalued, or rather it is fashionable to say everything is overvalued. But to that extent, I think the companies are just taking advantage of the fact that the market is giving less importance to valuation than they are to something that's a growing business. I think Bajaj Finance will grow, the housing part will grow as well. And they're listing almost compulsorily, right, because of the RBI NBFC rules. This may change the upstream valuations of Bajaj Finserv and Bajaj Finance. But I would say standalone, it's still a good stock to play with. The problem will come if there are interest rate cuts, and therefore at some point NIM compression within the space that Bajaj Housing operates in.
Okay, well, let's see how this plays out. Deepak, good to have you on. Thank you very much for joining in, and see you tomorrow on that important conversation on unlisted shares as well. Appreciate you making the time. Well, with that, back to the market, and actually the stocks that we were just discussing, Bajaj Finserv and Finance, sharp recovery from the lows.
Well, that's right. It's a Nifty Financial Services weekly expiry that will play a role as well. And, all through the day, you saw a lot of call writing. Now it seems the Nifty Financial Services Index has moved to the high point of the day. So it's not just the banks, it's the non-banking financial names that have moved up as well. Bajaj Finserv, Shriram Finance, just pull up the intraday charts out there. HDFC Life, SBI Life, all these are financial names, but not part of the Nifty Bank, and all of them have spiked up. Explains why we're seeing that huge spike, in the banking as well as the financial names. The Nifty Financial Services Index will play out the weekly expiry in the next 37 minutes or so.
Okay, all right. On that note, I think Good time to take a very quick break. We will come back on the other side, and we will be in conversation with our alpha manager on the show today. We have Vikas Khemani of Carnelian joining in with some thoughts on the market. Welcome back. Well, let's now look at something really interesting, and this is a note coming in from Rhythm Desai, Chief Equity Strategist at Morgan Stanley. He's written an interesting piece on the sources of correction, potentially, in the India bull market. Nimesh is joining in on this note. Nimesh, this is interesting because, Rhythm has been one of the biggest India bulls. He's kind of stuck his neck out and he's gotten it completely right. So what's the latest that he's saying and thinking?
Well, he's still putting his neck out and saying that the bull market is still on, and we are just halfway mark in this bull market. So that's the primary thesis. But he's put out some interesting data on and which is what a lot of investors locally and globally are asking for. As far as India, are we going to see a big correction or a deep correction? So again, Rhythm's note says that Indian markets have climbed the wall of worry, but there could be many sources of correction in this bull market, which includes both fundamental and technical. And and of course, which means that there could be corrections around the in this running bull market. But as I said, the key thesis is that he believes that we're still in the middle of just the halfway mark in this current bull market. Actually, this if there is a correction, it will test the patience of the investors who are sitting on the sidelines. Also, it will test the kind of money which has been from the domestic market. So that's the key message there. But he's also pointed out a couple of reasons which can lead to a big or maybe a source of correction, at least in this bull market. So if he's identified a couple of fundamental reasons and a couple of technical reasons as well. First, on the fundamental part, he believes that the potential slowdown for the first time since COVID in the domestic market, and on top of it, if there is a global slowdown, this can have a big impact on the earnings which can surprise on the negative. So that's one big concern or a big source of correction which can happen in the near future. And the second is the state level freebies which have been put out, and that could have a bit of an indiscipline as far as the state finances are concerned. So these are the two fundamental reasons. Technical reasons: one, a possibility of shift to the primary market from the secondary market, so that can suck out a bit of domestic liquidity. And two, if there is a global correction, even India could be part of it, especially if there is a deeper correction in the US market. So these are the few sources of correction what Rhythm feels can happen in this current bull market. But what can lead to this next leg of bull market? That's very interesting, because he believes that the fiscal consolidation has led to a big space for private capex to go up, which would means that earnings can surprise on the positive in the near future, and that could be one good source of this current bull market to go on. The second is the structural change in the holding of households into equity market, and that's been a big bull market reason for India to do well. And of course the fact that India's weightage is also going up in the global indices, so that can mean that global funds can actually be more bullish on Indian markets, and they pour a lot of money. So those are the things which can lead to this next leg of bull market, which you are currently in. From a sector positioning point of view, Morgan Stanley is currently overweight on financials, technology, consumer discretionary, and industrials. However, they are underweight on all other sectors. So, the short point is Rhythm believes that there could be sources of correction in this current bull market, but right now we are just the halfway mark, and there is more legs to go.
Halfway mark, right? So 50 done, 50 more to go.
Yes, Prashant.
Nimesh, thanks very much for that. Well, let's ask someone who's also, of course, been very, very bullish on markets for a while. Vikas Khemani is founder of Carnelian Asset Managers and Advisors. Vikas, good afternoon. Good to have you with us here. Thanks for your time. Prashant this side. First of all, I don't know if you ever thought 50 done, 50 more to go. That's the bull market. I mean, of course, we're not nitpicking here, but do you agree with the sentiment? And second, and more importantly, what are you doing, Vikas? Are you fully invested? Are the new Amritkal fund, what's the status? Give us a update, because we are catching up after a while.
Hi, Prashant. It's always good to chat with you. So I think I have continuously said that we are in the middle of a very, very structural, transformative, unprecedented growth story called India. And from a medium-term to long-term perspective, there's a great potential. We've chatted that in next 10, 12 years, Nifty can potentially go to 1 lakh. That's the kind of journey we are embarking on. Our corporate earnings are expanding, growing. So whenever this kind of transformation phase happens, the best thing is to remain invested. Nobody can predict, nobody can plan short-term corrections. They will always come when you don't expect, and they will always come from sources when you don't imagine. We all can guess, we can all guesstimate that what can lead to corrections, and a lot of people have been waiting for corrections. We don't think that corrections would come structurally. There could be short-term corrections which nobody can predict, but structurally I don't see there is a reason why there will be deep corrections. And people who've been calling out that markets are expensive are approaching from mean to reversion kind of mindset. But whenever there is any economies into transformative phase, mean to reversion doesn't work. And those are the people who, once you call out that it will correct, they have to continue to remain invested into that narrative. And hence, a lot of people have been in this camp that markets will correct, markets are expensive. But frankly speaking, I don't think markets are expensive. And so whenever you are in such a transformative phase, and we are able to find companies, great companies with a great growth tailwind, over next 3 to 5 years. So there is no case for sitting on cash. We are fully invested, maybe 1-2% cash, which is part of the normal course. But generally speaking, we are fully invested, and we are able to find ideas where we find risk reward in investing in them. And as you know that we don't buy stocks at any price. We believe in buying quality stock at a reasonable price, and we are able to find good ideas. And again, since you asked on Amritkal, just to give an idea, our Amritkal portfolio, which is fully invested, the earning growth over next 2 years is 25% of the portfolio. The ROE is 19%. Debt to equity is 0.1. My PEG ratio is around 0.9. Beta is 0.6. So you're basically growing faster than the index, stronger than the index, and cheaper than the index. So you're faster, stronger, cheaper. If you can build this portfolio, I don't see any case for sitting on cash. And that is our consistent view, and we continue to believe in that.
Okay, that's quite phenomenal. I was just going to ask you about the earnings projection in that target of the Nifty going to 1 lakh, Vikas. Well, that's astounding, right? Because if you just do the math, if you expect earnings in the market to compound at 15%, then I think we talk about the market doubling every 5 years. So 25,000 becomes 50,000, 50 becomes 1 lakh. But I mean, you're saying in your case, you're expecting your portfolio companies to compound earnings at 25%. That's phenomenal. So I know you can't talk stocks, but give us a peek into the sort of companies that you're looking at, that you're comfortable, adding positions to or buying afresh now. Within the themes that you like. For instance, you've been a big bull on manufacturing, on the whole Make in India drive. So maybe some more granular hints on the kind of businesses that you like.
Absolutely. And the fact that, your show's name is also Alpha Manager, and our job is to generate alpha. So we have to grow faster than the market. Otherwise, there's no role for us. Then people will put money into index, right? So obviously, we have to work hard to enhance an earnings growth and reduce the risk from a debt to equity perspective, or have the quality of the portfolio perspective. And that is what we do, enhance return or enhance earning and reduce risk. And, so we have, curated this portfolio is across 5 broad themes: manufacturing, consumption, financials, infrastructure, and services. Right now, we're significantly overweight in manufacturing and consumption. Consumption, we have invested first time in last 5 years. We think now the risk reward of investing has become visible. Again, when I'm saying consumption, does not mean I'm talking about broad baskets, but when we started, we bought companies like Dabur, we bought companies like LT Food, so we want to believe in very, very niche kind of company where we think that we can get visibility with kind of high confidence on 20-25% kind of earning growth. And that's where we do. And same thing, I think, in manufacturing. But manufacturing is a very wide subject, but within that you will have pharmaceutical, auto components, chemicals. It's a very wide, defense, EMS players. So fairly large basket. But within that, we are reasonably overweight on manufacturing, and we are able to identify companies with the kind of characteristics I spoke about.
All right. Hi, Vikas. What about the IPO market? I've seen some participation from you all out there as well, and with good reason. Interact Building Products, I think, you all participated in that. So tell us a couple of more themes that you like, and you made a bit of an exception. You named a couple of stocks. We like that. Go ahead.
No, I think so. The thing is that, we, of course, whether it is IPO market or secondary market, doesn't matter. We love, because when companies go public, as long as it's a good quality business, good management, and comes at a reasonable price. And the name you mentioned, I think, was at a reasonable price, and we liked it, and hence it's a structural play, in India's manufacturing theme, and hence we kind of picked it up. So it's for us, IPO or secondary makes no difference. For us, the risk reward of trade or investment makes a lot of difference, and that we evaluate irrespective of anything on a standalone basis. Within a sector also, even if a positive view does not mean that we like every stock, we have to still find ideas. Within manufacturing, we don't like many stocks which are kind of way past their risk reward framework. But then you have to go back again, check, what falls into your risk reward framework, and that's how we build portfolio.
Got that. So just Vikas, is it possible to share 2-3 ideas which you've owned long and which you continue to which you're going to continue to own for a long time? So there's no there's no problem talking about, just to use as examples of that portfolio, where you think there's enough confidence and that 25% earnings CAGR growth story will play out.
So some of the it's public information. I can surely talk about some of the names. We own, Container Corporation, we own Dabur, we own SRF, we own LT Food, we own, of course, Aditya Birla Capital, very large position for us. All these are public, hence I'm happy to share. There's not a problem. So these are some of our top, 5-6 holdings I just mentioned. But, we own about 25-30 names. But I mean, each of them, if you see, one thing, common theme you will find is the risk reward, reasonable valuation, and high growth. And that is the key characteristics of our portfolio. And we think that if for some reason markets go down, these stocks will not be significantly correcting from here. And that's what resilience you want to build in a portfolio. And if markets were to go down and come back, these stocks will recover faster. Their leverage in the system is very, very low.
All right, since you're talking about stocks, because just one name, I was trying to do some research, Bajaj Chemicals, it's moved big time, very, very small. Very, very small part. I mean, if you could comment on that, actually, it's up 30-35% after not moving for very, very long. I think it listed a couple of years or so ago, and then it did nothing. And suddenly it's moved up. If you want to just briefly talk about that.
We participated in IPO when nobody liked that company. We really liked the company. And if you ask me again, we do believe that if we like the management, it's a fantastic management, very driven people. It's a niche industry, so you got to understand the industry. So we could do the work in detail when we understood the industry, like the people, did the background check, super people. So whenever we find this kind of combination, we don't mind taking a position ahead of others, when markets don't like it. And we don't mind, and sitting on position for 3-4 years. I remember in one of the shows we had bought PCBL, Philips Carbon at 100 rupees, and you had asked me, this was I think probably 2 years ago, and that time nobody wanted to buy that. Today, the stock is 500, right? So, we typically like to, be a little ahead of the curve, buy companies where we understand the business, we understand the management, the risk reward is in favor, and this is one of that stock. When we bought it was in favor, and we'll continue to own it.
Okay, all right, Vikas, I remember that, and thanks a lot for joining in and talking about a few stocks that you'll have in your portfolio. Appreciate you joining in and giving us that. And what stood out for me was, we are talking about the Nifty going up because earnings will compound in mid-teens. You're talking about mid-20s. So obviously, you're looking at outperformance in comparison to the benchmark as well. For the time being, we slip into a short break. On the other side, Nimesh is waiting for us. He'll tell us what's going on in dealing rooms. Don't miss it. Welcome back. Well, a few stocks are calling for attention. Godrej Industries, pull up the intraday chart out there. That stock has spiked up in style. It's currently at the high point of the day. So big up move is what we're seeing out there. It was as is up close around 8%. Now that additional spike has come about. So big move in Godrej. And the other one I'm looking at is Geo Financial. The stock was down earlier in today's trading session. Now it's recovered all of those losses at the high point of the day. Well, Nimesh joins us to help us out with what he's picking up in D-Street Chatter. Nimesh, take it away.
And actually, another quiet day, so to speak. Nifty is very much range bound. Even the flows are quite muted as well. No clear direction on which way the market wants to go from here on. The broader market has relatively outperformed. But again, if you look at the advanced decline, it's pretty much 1:1. So there are equal amount of declines as well. You pointed out some big movers like the likes of Godrej and Geo Financial. But there are equal number of sells as well in the broader market stocks today. The only sector which has done relatively better in terms of flows is the technology name. So select buying is what I understand from larger FIs in the tech stocks, but otherwise it's been a quite muted in terms of flows as well.
Okay, all right. Let's get to the interesting part. Nimesh, what about individual stocks? What are you picking up?
Well, the first stock on my list today is AU Small Finance Bank. Another large block, nearly 1.1 crore shares got changed hands today. I understand it's a clean out trade from a private equity investor, so that's sold out. In terms of buyers, some domestic mutual funds were buyers and anchor investors in today's block. So the disclosures will be quite interesting in AU Small Finance Bank. The second stock is Axis Kids. A big downtick in that stock today, down 11% last I checked. The volumes are on the higher side as well. Looks like the street is anticipating a large block deal very soon in Axis Kids. The sense I'm getting is maybe the promoted entity is likely to sell 5 to 7% stake via block deal. So that's something to track in Axis Kids. The third stock is Interglobe Aviation. Post the block where the promoters, the Ganwal sold a good 5.5% stake. The stock's been pretty much in a narrow range. But today, there's going to be a buy flow of close to $40 million because of the FTSE adjustment. Post the Ganwal stake sale, there has been an uptick in the weight of Indigo for both in FTSE, which got implemented today, and of course it will happen in NSE as well. And the last is IDFC First Bank. Now, again, this is something which has been surprising the street a bit. For the last couple of days, there is a very strong indication that it could be a very large block. So there is a lot of depth in the stock at lower levels, but not that many funds know that as to who could be the potential seller. So a bit of surprise, so to speak, but there is an anticipation of a large block in IDFC First Bank as well.
Okay, all right. Nimesh, thanks a lot for that. We'll keep an eye out on all of those stocks. Well, by the way, in the last few minutes, the reason why we've seen such a big surge is because the Nifty Bank has come back into play as well. The Nifty Financial Services Index is playing out that weekly expiry. But the Nifty Bank, after a while now, it's got past that 50-day MA. Mildly so, but it's at least holding above that mark. And, the bulls will be hoping, let's end the market, because they've been waiting for that, the Nifty to go ahead and crack its 50-day MA. Seems to be happening as of now, if things stay the way they are. But Jay Bala of Cash the Chaos joins us on the show. Hi Jay, good afternoon. Good to see you win. Well, it's going to be a 14 straight session winning streak. 17 minutes done out of the last 30 minutes. 13 minutes to go. It'll be an average of the last half an hour if we can get there. So let's see how that goes. What's your view on the Nifty? Where are we headed from here on? And also the Nifty Bank appears to be having the breakout moment today. Tell us more.
Hi Nigel, good to be here. Yeah, the markets are bullish, but it's bumping up against weak seasonality of September. September happens to be one of the weakest months for the global equity markets, particularly the US. And for the Indian Nifty too, September is not one of the best months. So that's the resistance the markets is up against. And also yesterday's high of 23,333 is very close to my resistance of about 23,350. So, sorry, 25,350. I beg your pardon. And the markets are, heading into a weak seasonality period. And beyond mid-September, the markets holding up the highs is going to get a little bit tough and face headwinds. When it comes to the banking index, it's not yet a breakout. 51,960 is an important resistance. Once that's taken out, we're probably looking at fresh record highs to about 54,000. So watch out for 51,960. The lift is coming mainly from ICICI, but other than that, most of the banking names needs more action. And if the banking index were to take out the key resistance at 51,960, I would want action to be seen in SBI. I wanted to go past 840.
The bank Nifty is the one which is now looking a little stronger. So 51,506 is the 50% retracement. Last 2 days it's been dancing around this level, a little bit up, a little bit down, but around that level. And now it has taken that out in a conclusive way. So 51,700 plus. And then we get to the final frontier, which is 51,943, which is the 61.8% retracement of the fall from the all-time high, which is on the 4th of July, to, of course, the low, which is on the 14th of August. So the 61.8 is 51,943, and about 250 points away. That's a 0.5% away from that particular level. So that's a sharp uptick which is coming through. It's pushed the Nifty up into the green. Barely so, but I mean 2 points or so. But from the lows, it's a bit of a pull. We'll take a break. Jay, of course, is still with us. Lots to talk about. Stay tuned. Okay, welcome back. Markets, of course, on the Nifty absolutely flat. Nifty Bank looking good. Vivek is now joining in. There's a story at the bottom of the screen. Sudarshan Chemicals is in the race for coatings and pigment company. So company in the same space that Sudarshan operates in. And Vivek, tell us more.
Well, that's right. Three companies are, out of the top three global coatings as well as pigments maker. Remember, Huberg GmbH, the German-based company, in April 2024, they had gone ahead and filed for bankruptcy. And what we understand from our sources is that Sudarshan Chemicals, the Indian company, has gone ahead and submitted a bid to actually take over the global operations of the coatings as well as the pigments business of this particular entity. Now remember, Huberg Germany filed for regular insolvency proceedings over assets on April 23rd, 2024. So it will actually be an Indian company taking over a German MNC. The company filed for bankruptcy basically over the fact that they were unable to service the high debt they were reeling under, and also the company had made an attempt to restructure its debt but had failed to go ahead and get an approval from the lenders. What we understand from our sources is that Sudarshan Chemicals had submitted a bid to the insolvency administrator to take over the assets and has also offered a debt resolution. There are 4 bankers that we are aware of who are actually the lenders to Hubac. So Deutsche Bank, Commerzbank, LBBW as well as NordLB are the bankers, and we understand all 4 of these bankers are on board and the Sudarshan bid has been submitted to them. We reached out to the management of Sudarshan Chemicals. We are yet to receive a response from the same. Now, there's also an interesting development over here. Hubac GmbH, which is actually the German MNC, actually has a listed arm in India, which is called Hubac Colorants. Hubac Colorants, remember, if there is a change as far as the global entity is concerned, there will actually be a takeover which happens, on the back of which there will be an open offer that will be triggered in the Indian listed arm of Hubac. Along with that, one important thing to keep an eye out for is the fact that along with the open offer, Sudarshan Chemicals in this particular case may need to take on a little bit of debt, and that is something that the market will keep an eye out for, given the fact that this could be a leverage buyout, that they would be actually taking on a company that is as big as it, if not bigger, in terms of its actual top line size.
Okay, got it. Thank you so much for that. Vivek, a very, very interesting development. It seems that Hubac is one of the biggest leaders in the pigment space in the world. So let's see what the eventual numbers add up to in terms of the total outstanding debt and the money that Sudarshan will have to spend on this acquisition if indeed it goes through. But very interesting development, and thank you for getting us the latest on it. So that's Sudarshan Chemicals in focus. With that, let's quickly move on and get back to Jay Bala. Jay, we've seen a massive move on the financials today. Now, maybe that's just to do with the weekly expiry, but it's not just on the Nifty financial services, even the Nifty bank. It's a very impressive last sort of half-hour surge. Any trades that you would sort of advise, whether the banks or non-banks, looking at the chart structure now?
Yeah, I would not yet be ready to pull the trigger if I was trading the Indian markets on the banking sector. Because for me, 51,960 is an important level, and barring ICICI, none of it are looking very encouraging. But I would look for trades outside the mainline indices. First one is on SBI cards, which is related to the financial sector. It's breaking out of an inverse head and shoulder pattern on its daily time frame, and yesterday's close completed the pattern, and the potential for the stock to climb about 850 to 930, and the stop loss at about 689. And outside the financials, I have one from the Midcap space. This is a conditional buy, not yet a buy, but I anticipate something to happen between now and next Tuesday. So I'm putting this out. Galaxy Surfactants, it needs to take out 29.95. If that happens, the stop loss needs to be 27.44, and this has potential to go back to all-time highs past 3,600.
Okay, all right. So those are some of the trades that you're going with. Just a word on the global setup, particularly the NASDAQ, Jay. What is the structure telling you? Because we've gone through a lot of events, including mega earnings like NVIDIA and all. But basically, looking at the price action, what do you think the next move is?
Yeah, and the next move is possibly fresh all-time highs, but there is a possibility that the NASDAQ might falter because the semiconductor index, which houses the NVIDIAs and other AI names, that's starting to underperform and starting to say it's bound to see a correction. But the SPX, the US S&P futures, which is a broader index, and the Dow have already clocked fresh all-time highs. So this faltering might be just on the semiconductor index, but the NASDAQ might clock fresh all-time high, but that might not be able to sustain. We are heading into seasonal negative period for the US markets, and particularly mid-September in the election year tends to be slightly negative for the US market. So watch out for it. And although there is still a potential for the US 10-year bonds to drop a little lower than 340 bips.
Okay. All right. So just to cap it off, that's the global picture. That's some of the major global indices and trends. Jay, just to cap it off, final advice here for traders looking at the India market. Just recap the index levels as well and the top trade that you see right now.
Yeah, as long as the Nifty can stay about 24,770, the path of least resistance could be higher. But, as I pointed out last week, the structure is pointing to the possibility that Nifty might drop one more time close to the August lows of about 23,800 or 23,900, close to that level. But that will get triggered only below 24,770. But if 25,400 were to get taken out, this possibility of volatility in the very short term gets nullified. So watch out for these key levels. And my two picks are SBI Cards and Galaxy Surfactants. Galaxy Surfactants is a conditional buy if it were to go about 29.95.
Okay, all right, Jay. Thanks a lot for joining in and giving us, your take on the index and a lot of stocks that we did discuss as well. By the way, it appears like that winning streak is finally broken, unfortunately for the bulls. The Nifty is down close to 13 points, but for half of this last 30 minutes, actually, we were in the green. So it's going to be quite interesting to see which side does that average number come to. So we'll have to wait for the close on the Nifty. But stocks, it was a day of broader markets. Godrej Industries goes on with a gain of 20%. Big up move is what we're seeing out there. Geojit Financial up close to around 20%. Archie's, I don't know what's going on there. Very, very small counter, small market capitalization, up close to around 20%. Prism Johnson was up close to 7%. Shimaru was up close to 13.5%. IFL Securities up 6.5%. Elin Electronics, one of those listings that didn't really perform. Today it came back into play, up close to around 10%. And you had Tilaknagar Industries. We had highlighted this, that yesterday, massive delivery-based buying, big volume breakout that we saw. That one as well did pretty well in today's trading session.
Okay, the bell is gone and the Nifty is probably going to end absolutely at the flat line. I mean, right now it's a 10 point dip. Let's see what the adjusted close is. Very, very quiet. The weakness came in the form of, the volatility on the financial side of the market. So Bajaj Finance, for all the up and down, is ending down about 1.5%, the weakest stock on the Nifty. Infosys down a little over 1%. And then a lot of metal and material stocks, metals, commodities, oil and gas. So ONGC, for instance, lower by about 1.5%. Reliance itself down about 0.5%. Coal India, Tata Steel, Hindalco. So this was the weak complex today, JSW Steel. So you basically get the drift. On the upside, some of the banks did well. ICICI Bank about 1.5% on the upside. SBI Life, Bajaj Finserv, HDFC Life, Shriram Finance. So a whole lot of financial stocks, banks and non-banks, having a good last 1 hour thanks to some trading activity with the expiry taking place today. And then a decent day for consumers. Titan, Nestle, these are stocks on the upside as we see things. But I guess, Prashant, had it not been for the bank Nifty and the banks, then the Nifty could have found itself in a spot of bother.
Yeah, absolutely. And, so that bank Nifty rally came, I think, just in time. And the only hope is that there's a day two as well, right? I mean, because otherwise they've been very fleeting rallies. So maybe a little bit more here. And finally, like the Nifty bank also sort of comes at par. Maybe takes out the earlier high, the previous high, and then we'll see. But it's, of course, some distance away from doing that. You need 2 or 3 solid days for the Nifty Bank to get close to doing that. Well, I think it's a wrap on the session of closing bell from all of us here. It's goodbye. But, we take the action forward, look ahead into tomorrow's trading session and prepare you for what you need to know that is coming up in just a bit.
Thank you for watching CNBC TV 18 and do follow us on all our social media platforms for news, updates and more.